times is yours.
Okay, thank you Mbak Amalia for the introduction. Assalamualaikum warahmatullahi wabarakatuh. Good
Waalaikumsalam
afternoon.
warahmatullahi wabarakatuh.
Yeah, everyone, my name is Zuni. Just call me Bu Zuni. As introduced previously by Mbak Amalia, right? Can I call you Mbak Amalia? Yeah, is that right? Mbak
Yes,
Amalia.
yes,
Yeah.
Amelia.
Yeah, okay. As mentioned by Mbak Amalia, I'm an accounting lecturer from the Faculty of Economics and Business, Universitas Gadjah Mada, Yogyakarta. And thank you for having me this afternoon. We will discuss about accounting for leasing, in Indonesian context. We will discuss about this, and then tomorrow we will discuss about the updates on the Indonesian accounting standard. And yes, that is right. I'm currently a member of Indonesian Accounting Standard Board under the Indonesian Accounting Association. Okay, so today we'll. Mbak Amalia, could you please let me know if you cannot hear my voice or you cannot see my slides? Okay, otherwise I won't realize, if I'm talking to myself. And then also for all of you, if you have any questions or concerns, you can open your mic maybe, or type in the chat room, or as usually based on the class rules. Okay, so the point is, please let me know if there's any issues with my voice or the presentation itself. All right, now, okay, live transcription has been enabled. Okay, so I just cross this. All right, yeah. Okay, now in Indonesia, we call it as PSAK or PSAK 73 sewa or leases. So we'll discuss mainly about this issue, accounting for lease, which is referring to our standard, which is the standard akuntansi keuangan or financial accounting standard in Indonesia, statement number 73, which is sewa or leases. This standard is based on IFRS 16, or is referring to IFRS 16, and it's almost similar in all of the rules and then requirements with the IFRS 16. So the current PSAK, the PSAK 73, was issued on 18 September 2017. So it's about like almost 5 years ago, with the effective date of 1st of January 2020. The IFRS 16, the leases accounting standard issued by the International Accounting Standard, is a standard which superseded or changed from the previous standard, which is IAS 17. The IFRS 16, the new standard by IASB, was published on January 13, 2016, and is effective for annual reporting periods beginning on or after January 1st, 2019. Okay, so now you can understand the time gap here, that according to the IASB, the standard is effective on January 1st, 2019. But in Indonesia, we adopt that standard and become effective on 1st of January 2020. So there's a 1 year gap. ISB worked jointly with FASB for the standard. However, there are still some differences remained for the accounting for leases according to the International Accounting Standard Board compared to the US accounting standard. So there are still some differences right now. They're not exactly similar with regard to the accounting for leases under the US accounting standard versus the international accounting standard. And Indonesia follows international accounting standard. So then we can conclude that our accounting standard is different from the US accounting standard in terms of leasing. There are still some differences, but there are also some similarities. Okay, and then PSAK 73 eliminates or clarifies the distinction, the differences between operating and finance leases. The current standard, which is the new standard, bring most leases on balance sheet for lessees under a single model. Previously, not all of the leases are bring on to the financial statement. We call it some off-balance sheet leases. But now, most of the lease recorded by company or recognized by company, they have to be presented in the balance sheet or in the financial statement. That's why we call it as eliminates or clarifies the distinction between operating and finance lease. So now on, most leases are presented on balance sheet for lessees. What about lessor? Accounting for lessor actually remains unchanged. So it still follows the previous lessor accounting. The distinction between operating and finance lease is retained. We have to use some criteria to determine whether an accounting lease should be presented under operating or finance lease. Okay, do you, any one of you still remember the accounting for lease under the lessor? Or I would like to know, any one of you coming from a country which still not referring to International Accounting Standard Board? Yeah, you can answer any one of these. Yeah, Sonia, I can see you open your mic. Sonia? No? Any one of you coming from other country which any one of you coming from outside Indonesia? Hello? All of you are Indonesian?
Yes, Miss.
Yes, sir.
Yeah.
Yes, Miss.
Okay, I would like to know if any one of you coming from other country, just want to know what standard are you referring to, whether it's the ISP standard or US standard. What about you, Ruth? Ruth Kunda?
We use US standard, Miss.
Oh yeah, where are you from? I'm sorry.
I'm from Zambia.
Zambia.
Yes, Miss.
Okay, so you are using US accounting standard. That's interesting. So yeah, there are still some differences between the US and the ISB accounting standard. And Indonesia follows the ISB accounting standard, which is IFRS. Okay, so there might be a little bit difference between these two standards. Okay, thanks, Ruth. Any other fellow here coming from other country? Okay.
Yes,
Yeah.
I'm here.
Yeah. What about
Yeah,
you?
I'm from
Where
Yemen.
are Abdurrahman?
Yeah, exactly.
How do we call you?
Yeah, Abdurrahman.
Abdurrahman. Where are you from and what standard are your country using at the moment?
I'm from Yemen.
Yeah.
You know Yemen?
Yeah, I know Yemen. Yes.
US, we are using US standard.
Sorry. Yeah, you are using
Can you hear
US
me?
standard. Yeah, I can hear you.
Yeah.
Oh, so you are using US accounting standard?
Not pretty sure, but I think so.
Okay. Okay. Okay, then. Anyone else? Anyone else? No? All right, then. I will continue. If you'd like to share, we will be happy. We're happy to share with you as well. All right. Thank you very much, Abdurrahman, Ruth, for your sharing. Okay, I'll continue with the discussion. Now, what about the IFRS 16? The SAK 73 in Indonesia, again, refers to IFRS 16. IFRS 16 has a significant change. It brings changes significantly on how a company accounts for leases that were previously off balance sheet because due to the current or the previous standard, which is the IAS 17, other than short-term leases of 12 months or less. Okay, so now the IFRS 16 requires that all leases other than short-term leases and leases of low value assets has to be reported as finance lease in the balance sheet. So previously they can be off balance sheet, but now it has to be on balance sheet. All right. Except again, short-term leases, which is leases of 12 months or less, and leases of low value assets. The examples of those characteristics includes personal computers and office furniture. So other than that, it has to be bring on balance sheet. And second, there's no change on the definition of lease, but there's changes on the guidance on how to apply the definition. And then third, the IFRS 16, of course, will change the balance sheet figure, income statement figure, and cash flow statement figure, especially for companies with material off balance sheet leases. So now we can see if a company has a large amount of off balance sheet leases, they have to put this on the balance sheet, and so it changes the figures. Do you know what's the difference between the off balance sheet and on balance sheet information or numbers? The on balance sheet information means that the information is reported in the balance sheet itself. But the off balance sheet means that the information is not reported in or presented in the balance sheet. Instead, they are provided maybe in the notes to account or the disclosure of financial statement. Okay, so there's a significant change now that all leases contract or leases transaction has to be reported in the balance sheet because of the new criteria on the what's that classification of lease. And the accounting requirements for lessors are substantially unchanged, but the disclosure is enhanced. Okay, so compared to the previous standard, there's no significant changes for lessor to report lease transaction, but the disclosure is enhanced. The disclosure requirements is getting more comprehensive right now. Now, on the right-hand side here, if you can see the percentage of IFRS or US GAAP companies who disclose off-balance sheet leases, here we can see that in North America, companies which disclose off-balance sheet leases are 62% in North America. That means they have a large amount, or they have they have many transactions, lease transactions, which are presented off balance sheet, up to 62% in North America. But in Europe, it's low. It's a bit lower, which is 47%. In the Asia Pacific, it's 43%. And in Africa, Middle East, it's 23%, similar with the Latin America. And the data is based on listed companies only. So what does it mean? That means that companies in North America tends to recognize their lease transaction as off-balance sheet transaction. So what does it mean? It means they don't recognize their lease transaction as an increase in the asset and an increase in the liability. Instead, they only disclose it in the balance sheet. All right, so that means their asset and liability is under-reported or under-recognized. The value is much lower than the actual value. The presented value is much lower than the actual value. And then the present value of future minimum payment for off-balance sheet total for the leases is up to 2.18 trillion US dollar. It's a huge amount. So that's why the implementation of the new standard IFRS 16 and then also PSAK 73 is expected to resolve this issue of the off-balance sheet financing, so that users of the financial statement will be more informed. And the implementation of PSAK 73 in Indonesia affect many standards. As you can see here, the PSAK 73 is superseding, or it's a new standard to change the previous standard, which is the PSAK 30 in Indonesia, which is or PSAK 30 in Indonesia, which is sewa. So this is the previous standard that we use, which is PSAK 30 sewa. And now we are using we are implementing PSAK 73. And also related with that, the new standard is also superseding ISSAF. ISSAF is the interpretation of Indonesian accounting standard. There are 4 interpretation of standard, which is number 8. Number 8 is referring to IFRIC number 4. IFRIC is the interpretation published by the ISB, and then ISSAF 23, yeah, which is referring to SIC 15, and then ISSAF 24, which is referring to SIC 27, and ISSAF 25, which is our own interpretation published by the Indonesian Accounting Standard Board, Hak Atas Tanah, because it's unique in Indonesia. All right. Okay, and now, so what is the cost of the implementing new standard? The cost of implementing PSAK 73 in 2020 differs for each industries. Again, it depends on whether the industry has material lease transactions or not. Okay, so it will affect if they have huge off-balance sheet figures, as I mentioned before. If a company has a significant amount of off-balance sheet lease, right? You understand the term, right? I'm sure that you understand what is the off-balance sheet information. these are the lists that are not presented in the balance sheet. They are only presented in the disclosure of financial statement. And therefore, users of financial statement will not see this number as assets and liabilities, right? Now, because of this, their assets and liabilities are undervalued. So it's not good. So the new standard requires a more clear criteria that almost all of the lease transaction has to be presented on balance sheet. And that's why then the number or the financial statement now is getting is having higher amount of liability and higher amount of assets. But the effect will depend on the size of the company's lease portfolio. Okay, if the company has material amount or significant amount of the lease transaction, which is off balance sheet previously, now they will put it on balance sheet and it will affect them heavier compared to other companies which do not have significant amount of off-balance sheet financing or OBS. We call it OBS. OBS leases means the off-balance sheet leases. Okay, so point 3 here, I mentioned that cost for companies with material off-balance sheet leases will be higher. Okay, and on the right-hand side, this is the off-balance sheet leases by region. As you can see, this is data provided by the ISB. You can see that in the North America, the number is really high compared to other region. Okay, and what about the impact on industry? The most impacted industries by the standard include the airlines industries. So the first impacted industry is the airline industry. Why? Because previously, because most of the airline industry, they ran their aeroplane because of the rent, or rent in here means also leases. So because of that, they will have to capitalize all of the airplane leases at the moment based on the new standard. Previously, they can still recognize the aeroplane leases as off-balance sheet financing or off-balance sheet financing or operating lease, but now they cannot. Second industry is retailers, as you can see here. The assets and liability of this company or the industry will be much higher now under the new standard. And the third one is travel and leisure, number 4 transport, and number 5 telecommunications. Why retailers are impacted? Because they usually rent their store or shop or warehouse, and now they have to capitalize all the leases on the balance sheet. As well as telecommunications, previously they have large amount of operating leases. Do you know how to recognize operating leases? We'll talk about later on. And because of the new standard, they have to capitalize all of the operating lease into debit asset and credit liability. Debit right of use of assets and credit lease liability. So their liability is getting much higher at the moment. Okay. Now, the other impact for Indonesian companies and also for all companies is all lease is on lessee's balance sheet right now. So firm's liability will increase significantly. Interest expense and depreciation changes will depends on the difference between interest expense plus depreciation versus lease liability. And then in Indonesian companies specifically, there will be tax effect. Why? Because taxable income will increase Why? Because depreciation of lease asset is non-deductible expenses. So even though they recognize depreciation on the lease assets, it is non-deductible expenses. And so the taxable income will increase, right? Why? Because there's no depreciation expense as deductible expenses. It's non-deductible. Second, because of that, then regulator need to adjust tax regulation due to this change in the accounting standard. Okay. Now, what about the benefit of this implementation? The benefit has to be always outweigh the costs whenever a company implement a new standard. So it also happened with PSIK 73. The new standard is believed to have more faithful representation of companies' assets and liabilities right now, because all leases will be presented on balance sheet. Second, it will provide greater transparency of a company's financial leverage and capital employed. You know why? Because now all the leases has to be capitalized. And when it is capitalized, it will be presented as asset, which is the right of use of assets, and credit on liability. Third one, it will reduce the need for users of financial statement to adjust lessee's balance sheet and income statement. The fourth one is to eliminate the non-GAAP information about leases, which is the off-balance sheet or OBS information. Number five is to improve comparability between companies that lease assets. So all companies that rent the assets and that borrow money to buy assets will be more comparable. So we will have an improved comparability between these companies. And then last one is to ensure a level playing field in providing transparent information about leases to all market participants. So those are the benefits of the implementation of new standard. Okay, so far, any questions? And do you know what's the difference between capital lease and operating lease? Anyone? I'm sorry. No, not yet. Yeah, you can just type down your questions or concern. Okay, I'll just go through it briefly, unless you have questions. Now, coming from the leasing environment, it's the same with all leasing. I think leasing definition in many standards. A lease is a contractual agreement. So it's a contractual agreement between a lessor and lessee. It gives the lessee the right to use a specific property owned by the lessor for a specified period of time. And the largest group of lease equipment involves usually the IT equipment, transportation, as we mentioned before, aircraft, aeroplane, rail in many countries. In Indonesia, it's managed by the government, the rail. Fourth one is construction. That's true. It hit a lot. Yeah, it hit much to the construction industry. And fourth one is agriculture. These are the largest group of lease equipment. So in this industry, companies have, what is that? They have a large number of leased equipment. So these are the example from many countries, because you come from different type of country. Carrefour, they have large amount of lease because stores are not fully owned. They are rented under leasing arrangement or agreements. And then the group also owns shopping centers, which are mainly managed by its hypermarkets and mainly anchored or dominated by its hypermarkets and supermarkets, and that the stores are rented out. Delhaize Group operates a significant number of stores under finance lease arrangements. Okay. And then McDonald's as well. McDonald's lease 15,000, more than 15,000 restaurant locations through ground leases. They don't own all of their property, and then also many companies. Yeah, so they are really advantage. They really have advantage through leasing. So now, what are the advantages of leasing? For lessees, leasing will provide 100% financing at fixed rates. This is beneficial for lessees because then they can control their cash flow. Second, it helps them to protect against obsolescence of the equipment or assets, because they don't have to use the assets until, or they don't have to use the asset until the end of the useful life. Third one, it will provide flexibility because then they can always choose which company to lease on, and then which which equipment that which type of equipment or computers that they would like to lease. And fourth, it's a less costly financing compared to buying or acquiring assets. Whereas for lessor, the leasing transaction provide, first one is profitable interest margins, meaning that the lessor will have interest revenue, which is much more interesting for them because it's profitable margin. Second one, it stimulates their sales of a lessor's product. So for example, manufacturer, if they have difficulty to sell their manufactured assets, they can stimulate that, they can increase their sales of assets through lease arrangement. So they provide the assets as a lease asset to the lessee. Third one, it provides tax benefits to various parties in the lease. So it depends depends on the tax regulation in a country. And fourth one, it provides a high residual value to the lessor. Why? Because the lessee will take care of the assets according to the contract, so that they can protect the residual value to be high. Okay, so those are the advantages of leasing. That's why the contract is still there. Many companies are interested to be lessee or lessor in this transaction. So these are the example or the relation on the lessor. Lessor can be banks, independents, or captive leasing company. So if you ask who are the lessor, they can be banks, they can be independents, they can be captive leasing company. Yeah, they have the assets and then they rent the assets to the lessee. Okay, and if we look at the market share, banks will have the highest market share in this type of transaction as a lessor. Now we are going to lease accounting. Lease accounting, actually, lease accounting focus on the right to control the use of unidentified assets. What are the assets? They can be property, plant, or equipment. It has to be unidentified assets. So we have to identify the assets. And then the right is there for a period of time in exchange for consideration. ISB requires lessees to capitalize all leases. So basically, the new standard, IFRS 16 or PSAK 73 requires lessees to capitalize all leases. All leases, yes, except only two exceptions. First is leases covering a term of less than 1 year, or 2, lease of property with a value less than $5,000. And then the right to use property under the lease will be an asset in the perspective of the lessee, and lessee's obligation to make payments will become a liability in lessee's perspective. So assets will increase and liability will increase as well in the same time for the lessee. So again, the ISB provide an exception to capitalize all leases. So again, all leases have to be capitalized, except first one is low value leases, which is the underlying assets with the value of $5,000 or less. In this case, lessee may choose to expense lease payment as incurred as an operating lease as expenses in the income statement. Okay, so they don't have to recognize this as an increase in the asset and liability. And second is short-term leases for lease term of 12 months or less. Again, lessee may elect to expense lease payment as incurred in this transaction. In other words, they will recognize as an operating expense, rent expense. Okay. So far, questions? No? Okay, so from the lessee's perspective, again, we recognize interest expense using the effective interest method, and we record depreciation expense on the right of use assets. Okay, so we recognize an increase in the asset. We use this term, right of use asset on debit, right? This is an asset. And then on credit side, we recognize lease liability. And then every period, we will recognize interest expense using the effective interest method. Now, this will be applied whether the lease is a purchase of the asset or when the lessee only control the use of the assets. So you know the difference, whether lessee buy the asset or only rent the asset, it's still applied. The accounting still applied. We call it as finance lease. Okay, any questions so far? Not yet. All right. Okay. Now, now it's about the measurement. The measurement. To measure lease liability and lease asset, we need to know first one, the lease term for the lessee. The lease term is the fixed non-cancelable term of the lease. So we need this fixed and non-cancelable term of the lease. And then what if there's a bargain renewal option to extend the period? So for example, you lease PCs, personal computers for 2 years with the rental value of $100 per month per computer. And then after that, you can lease them with a discount value, which is with the discount, which is $10 per month per computer for another 2 years. So that's a bargain renewal option. So the bargain renewal option extend lease period, and at the commencement of the lease, the difference between the renewal rental and the expected fair rental must be great enough, must be quite different significantly to make us interested to renew the option, to take the option. So we call it as bargain renewal option if the difference between the rental and the renewal is great enough. Yeah, well, we will be interested to extend our lease because the price that they offer is really interesting, as we can see in the example. Therefore, leases Lenovo personal computers for 2 years at a rental value of $100 per month per computer, and then they subsequently can lease them for $10 per month per computer for another 2 years. Wouldn't you be interested in this offer? Of course, it will be interested, and we will considered to get the option. The lease clearly offers a bargain renewal option. And therefore, the lease term is considered to be how many years? 2 years or 4 years in this case? What do you think? No, I want you to answer this measurement of the lease term. In this kind of case, how many years should we consider the lease term will be? Anyone? Anyone would like to share the answer? No? Okay, no. When there's bargain renewal option, then we will consider, sorry. Okay, so then in this case, this transaction in this lease term is considered to be 4 years, okay, because there's a bargain renewal option. Now, second is lease payment. Lease payments will include fixed payment, variable payments that are based on index or a rate. That's okay. And then guaranteed residual value and also payments related to purchase or termination options. Yeah, that the lease is reasonably certain to exercise or incentive. And the third one is discount rates. In discount rates, lessees are encouraged to use the present value, to use the implicit interest rate to calculate the present value of the lease payment. However, if it's not practicable, if it's not available, then the lessee can use the incremental borrowing rate that they have. Okay, so implicit interest rate is the interest rate that implicitly expected by the lessor. So if we cannot find that value, then we can use our own incremental borrowing rate as a lessee. Okay. Yeah. So for a summary, the measurement on the rights of use of assets in the beginning is the acquisition cost. Okay. And in the subsequent measurement, we will use cost model or fair value model if the asset is investment property, or even company can use revaluation model. And for the lease liability, the beginning value will be the present value lease payment using implicit interest rate or incremental interest rate lessor. And in the subsequent, lease liability include interest expense and lease payment. And if there contract amendment, then company needs to make or to conduct remeasurement. If there's a contract amendment, for example, there's a change in the contract or lease contract in this case. Okay. Now, what about lessor accounting? Lessor, in the other perspective, they determine the amount of the rental payment. So the one who determines the amount of rental payment is the lessor, not the lessee, even though they may negotiate. So lessor will determine payment using their rate of return, or we call it as the implicit rate that expected by the lessor. Okay, you are as a lessor, you will expect that you will expect that you will get this much amount because you are expecting certain rate of return, certain percentage of rate of return. And second, you consider credit standing of lessees, or lessor will consider credit standing of lessees. And then lessor also consider the length of the lease as well as the status of the residual value, whether it's guaranteed or unguaranteed. So if the residual value is guaranteed, then whenever the asset at the end of the contract has the value lower than the expected value, then lessee has to pay the difference between the expected value and the actual value of the residual value. You know, yeah. For example, when your asset is getting the value of the asset is getting lower because of the usage of the lessee. Okay, but if it's unguaranteed, then you as a lessor will receive at any amount the residual value. The lessee will not pay any difference between the residual value, the actual value of the residual value, and the expected as mentioned in the contract. Okay. And the classification of leases by the lessor in Indonesia, we also use the criteria to classify leases, whether it's a finance lease or operating lease. So the criteria includes, first one is transfer of ownership test, whether it fulfill transfer of ownership test. If it is, then lessee will classify, sorry, this has to be lessor. Lessor has to classify as a finance lease, but if no, then go to the second criteria, purchase option test. So if it fulfills purchase option test, then lessor has to classify as finance lease. But if not, then we go to lease term test. If it follows the lease term test, is the lessee term for a major part of the remaining economic life of the underlying asset, then if it follows or fulfills that, it will be classified as finance lease. But if not, we go to the next criteria, whether the present value of the sum of the lease payment and residual value guarantee not reflected in the lease payment is equal or exceeds substantially all of the underlying assets fair value. If yes, then we classify as finance lease. But if no, we go to the last alternative use test. Is the underlying asset of such a specialized nature that it is expected to have no alternative use to the lessor at the end of the lease term? If yes, it will be classified as a finance lease. If no, classify as an operating lease. Yeah. So if the underlying assets is not special, does not have a specialized nature that is expected to have no alternative use to the lessor at the end of the lease term, then we will classify that as an operating lease. Because why? Because there's alternative use to the lessor. The lessor can use it for other purposes. Okay, and for finance lease, it must be non-cancelable. The contract must be non-cancelable and meet at least one of the 5 tests. This is from the lessor's perspective. Okay, yeah. And then we already discussed about this. If you have any questions, this is more explanation about alternative use test. Yeah, if at the end of the lease term, lessor does not have an alternative use for the assets, then lessee classifies the lease as a finance lease. So the assumption is that the lessee uses all the benefits from the lease assets, okay? And therefore the lessee has essentially purchased the assets, or they have a substantial benefit on the use of assets, as well as the control on the asset. Okay. The other test, I think it's clear enough, but please go ahead if you have questions. Now, what about lease payment? Lease payment generally include fixed payment, variable payment, residual values, and then it include that the payment, the lessee is reasonably certain to exercise, that they are able to exercise. But the discount rate includes we can use the implicit rate. This is the first rate that we have to use. The priority rate should be the implicit rate to determine the present value of the payments. However, if it's not practicable to to the lessee, for example, from the lessee perspective, but for the lessor's perspective, they have to use the implicit rate. Okay. And for the rate at the commencement of the lease, it will cause, or it will bring the present value of the lease payment and unguaranteed residual value to be the same or equal to the fair value of the lease assets. So that will be the implicit rate. Okay, now what about the measurement and presentation by the lessor? Okay, for a sales type lease, or we call it as finance lease, from the lessor's perspective, we call it as sales type lease because lessor is basically selling their assets. The lessor will account for lease in a manner similar to the sale of an asset. Okay, and then they will record a lease receivable and eliminates the lease assets. Okay. What about the lease receivable? How much is the lease receivable? The lease receivable includes the present value of rental payments, right? Plus the present value of guaranteed or unguaranteed residual value. So it doesn't matter whether it's guaranteed or unguaranteed residual value, it will be added to the present value of rental payments. This is the sales type lease from the perspective of the lessor, or we can also call it as finance lease. However, under the operating lease, if it doesn't fulfill the criteria to be capitalized as a finance lease, then the lessor will recognize that as the operating lease. In this term, the lessor will continue to recognize the asset on its statement of financial position. Yeah, so they still recognize that asset. They don't credit the asset, right? And then recognize lease revenue, generally on a straight line basis in each period. And then second, continues to depreciate the lease asset. Okay, this is what happens if the lease is still is under operating lease. Okay, so far any questions? No, if not, there's also a sales and leaseback term when a company transfer an asset to another company and then lease the asset back from the other company. Okay, so we call the term of seller lessee and buyer lessor. Okay, so for example, in this case, Darden restaurant, it's a seller lessee, sells the underlying asset to the Golden Gate Capital. Golden Gate Capital is a buyer lessor. Buyer, first time buyer, and then second as a lessor. Darden restaurant, first time is as a seller, and then in this case, become the lessee. Yeah. So what is the motivation of seller and then become lessee? What is the motivation of company to sell the restaurant and then lease back the restaurant? First one, because they need cash. They need cash that otherwise would be tied up in property to expand its operations. And at the same time, they can continue to use the property through the lease term. And then second motivation, because Darden can structure the lease arrangement. So then issues such as repurchase provision, refinancing issues, conventional financing costs can be minimized, right? And then third one, Darden may receive tax advantage in that entire rental payments, which are tax deductible. Then it become advantage for Darden. Whereas under a conventional financing, when they borrow money from the bank, they can only have deduction from interest expense and depreciation. So it's much more, much more beneficial for Darden in this case to have a sale and to sell their property and then lease back their property. And what is the motivation of the buyer and then become lessor? First one, because they can get a higher rate of return under the sale leaseback compared to the traditional financing. And during the lease term, Golden Gate is protected from a downturn in the real estate market, and they can have inflation hedge. So they provide, they can get benefits, assuming that the property appreciates in value. We don't know if there's some time in the economy, there's a depreciation in value. And then for the accounting issue is whether the transaction is a sale or a financing. The accounting issue, is it a sale or is it a financing actually received by Darden? First one, if control has passed from seller to buyer, then a sale has occurred. Second, if control has not passed from seller to buyer, then the transaction is considered as a financing. We often refer this as a failed sale. Okay, so in this case or in this transaction, we can recognize gain or loss. Okay, so Darden can recognize an increase in cash and reduce the carrying value of the assets to 0, and then they can recognize gain or loss as appropriate. And then they account for the lease back in accordance with lease accounting guidance. Okay, so this is an example. For example, Keraton sells one of its buildings and it has carrying value of 580,000, which is the cost 800,000 minus accumulated depreciation of 220,000. And Keraton sells it to Jogja Bank for 623,110. And then after that, Keraton leases the building back from Jogja Bank for 50,000 a year for 8 years of the 15 years of remaining economic life. So we assume that the present value of the lease rental payment is 310,000. Now the lease is classified as an operating lease by Jogja Bank. So in this case, they will record debit on cash, as much as the cash that they receive 623,110, and then they write off accumulated depreciation of building as well as the building, and recognize gain on disposal of plant assets. And then because they then lease the asset, Keraton lease the asset, then they make an entry to record the operating lease from Jogja Bank, debit on the right of use of assets and credit on lease liability. So assuming that it's a operating lease from Jogja Bank. However, if the lease from Jogja Bank is classified as a finance lease, then we call it as a failed sale. So we do not reduce the carrying value of the building, and then we depreciate the building as if it was the legal owner, and then recognize the sale proceeds from Jogja Bank as a financial liability. So we recognize debit cash, credit notes payable. Because it's a financing transaction, not an operating lease transaction. Now, other lease adjustment will include executory costs, etc. So I'll just go directly to the presentation and disclosure. In Indonesia, we follow exactly the same presentation and disclosure in IFRS 16. So basically, lessee's financial statement has to provide all leases in the statement of financial position. They have to recognize on asset an increase in the asset, right of use asset. Okay, and then in the liability, there's an increase in the lease liability. And income statement, in the income statement, lessee will report depreciation expense and interest expense. What about lessor? In the lessor financial statement, they have to report related to finance and operating leases. For finance lease, they have to report in the statement of financial position, lease receivable presented separate from other assets. So we cannot mix up lease receivable with other receivable or other assets. We have to, our company has to present separately lease receivable in this case. And then if it's a finance lease, they have to recognize the lease assets. So for example, the lease assets is building. So they have to recognize the building. They have to credit the building, right? Building on credit, and then debit lease receivable. Okay. And in the income statement, they have to recognize interest revenue and selling profit or loss for sales type lease. Okay. Whereas if the lease is operating lease, lessor has to continue recognize assets subject to operating leases as property, plant, and equipment. And then revenue generally recognized on a straight line basis. Depreciation expense also has to be recognized on the lease assets. Yeah. That's the presentation. What about the disclosure? These are the qualitative information that has to be provided by lessees and lessors. They have to explain the nature of the leases, including general description of the lease, and then variable lease payments has to be determined and how to determine that. Third one is the existence on the terms and conditions. Existence and then terms and conditions for options, for example, to extend or terminate the lease, and for residual value guarantees. And then third one, information about significant assumptions and judgments, for example, on the discount rates. And these are the more specific information that has to be disclosed. So basically, it has to be really transparent for users of financial statement. Whether in lessee's or lessor's perspective. For example, for the lessee, the disclosure has to inform about the total cost, finance lease costs, and separate between the depreciation on the right of use assets and interest on the lease liability, and then low value and short-term lease costs, weighted average remaining lease term and weighted average discount rate, and then maturity analysis of finance lease liabilities. So to ensure the liability during the current period and the long-term period. And for lessor's disclosure, information required are more comprehensive compared to the lessee, yeah, including the last one, management approaches for risk associated with residual value of lease assets. So company has to inform about buyback agreements or third-party insurance if there's any. Yeah, because they have risks that has to be disclosed to the users of financial statement. Okay, and the analysis, because assets and liabilities are increased, the number of financial metrics in the financial statement to measure profitability and solvency will also change. What are they? First one, return on asset will decrease. Second, earnings before interest, taxes, depreciation and amortization, or EBITDA, will need some adjustments. And then debt to equity ratio or leverage will increase. The interest coverage ratio will decrease due to this accounting. Okay, thank you. Please, if you have any questions or comments or concerns. Thank you, Mbak Amelia.
Thank you, Miss, for the explanation. So maybe you guys have another questions to Miss Zuni. You can put the question on the chat below, or you can raise your hand and unmute your audio.
Okay, if you still don't have any questions, I just would like you to answer. If your company needs to buy a building on a tract of land, building and land, will your company choose to buy that assets or to lease that asset? What are the considerations? Okay, there's no right or wrong answer, but I would like you to have to provide your opinion. I'll just share my screen. Sorry. Or maybe like some quiz, okay, Kak Amelia? Okay, can you answer my question? When is PSAK 73 became effective in Indonesia?
I'm sorry, Miss.
Okay, raise your hand. Raise your hand.
Or maybe I can help it to write in the comment below, Miss. What is the question, Miss? Pardon.
Okay, yeah, I'll just write this down. I'm sorry, it's wrong screen. Okay. Yeah. Yeah, I'll share my screen here again. Oh. I have technical difficulty. Yeah, sorry, I have technical difficulty. So when is PSAK 73 become effective in Indonesia? I'm sorry.
You guys may answer the question, guys.
Maybe
Miss, someone has answered. Abdurrahman answered 1 January 2020.
Okay, very good, Abdurrahman. Yeah, you are from Yemen, right? Yeah, it's great. He's from Yemen and he understands that the PSAK became effective on the 1st of January 2020. Okay, I don't think I can. Okay, now. I would like to close my whiteboard. Okay, second one, what about the IFRS 16? When is the effective date of IFRS 16? Okay, when is the effective date of IFRS 16? Anyone would like to answer?
Miss, someone has answered.
Yeah, two students answered, Abdurrahman and Akila and Sonia. Yeah, 1st January 2019. All right. Okay. Now, what's the main difference between the new standard and the previous standard? What's the main difference between the new standard and the previous standard? Anyone knows? What's the difference between the new standard and the older standard? Yeah, here it is. You can mention only one. Okay, anyone? Anyone know what are the differences between PSAK 73 and the previous standard? Okay, I have a keyword here is the new new classification. To clarify and something. So the new standard provide new classification in clarifying between the two. What are they? Okay, maybe Abdurrahman or anyone else? Okay. Okay, you forgot about the difference. The difference between the two standard. Okay, the difference between the two standard is in here. Yeah. Yeah, so the new standard change how a company accounts for leases that were previously off balance sheet according to IS 17. Yeah. and then now it become on balance sheet. So this is the main difference, in the new standard. Yeah. So the new standard requires lessees to capitalize all leases except two things. Leases covering a term of less than 1 year. So leases covering a term of less than 1 year, or two, lease of property with a value less than $5,000. Okay, other than that, all has to be capitalized. All leases has to be capitalized. Whereas in the previous standards, we use criteria to capitalize leases. We use criteria to capitalize leases. So not all leases has to be capitalized. Leases will be capitalized if they fulfill the criteria of lease capitalization. Okay, so this is the main difference in the new standard, that lessee now has to capitalize all leases except low value leases and short-term leases. What about lessor? Lessor still use lessor's classification still follows previous standard, still the same. Yeah, still the same. Okay. Okay. What else? And then what industry will be highly impacted by the new standard of leasing? Okay. What industry will be highly affected by the new standard? Anyone? Yeah. Anyone would like to try? What industry will be highly affected by the new standard? Okay, what are the industry? And anyone would like to try? Here. The industry that will be highly impacted of the new standard will be the industry which has largest amount of lease transaction or involve a material or significant lease transaction, which includes can be IT company, transportation company, construction company, agriculture company, or telecommunication company. Okay, so just like this, companies in the airlines industry, retailers, travel and leisure, transportation, telecommunication, energy, media, etc. As you can see here, companies in the airlines industry, now they have to capitalize all the lease transactions which are previously off balance sheet. Okay, previously off balance sheet, now it become on balance sheet. It has to be on balance sheet. Here, the present value of future payments for off balance sheet leases to total assets will rise up to 22.7%. Or in the nominal nominal US dollar, it will be 119 billion US dollar. So it's a huge amount of this of the transaction. Yeah, I will provide the PowerPoint slide to you. Yeah, and also for tomorrow's material, yeah, to the committee. Okay. Okay, any questions? Any questions so far? All right. No question? Yeah.
Okay, so guys, do you have any further questions, guys? Or maybe, Miss, they already understand about the material that you give to us.
I hope so, yeah.
Okay, maybe we can move to the next agenda is photo session. So I highly recommend you guys to open your camera because we can take the picture. So you can on cam, guys. Okay, maybe we can take the picture now. So I will count on 1, 2, 3. The second slide, 1, 2, 3. Okay. Thank you so much, Ma'am Zuni, for the material that you give to us. I hope the material will have insight for us in the further knowledge. Thank you so much for Ms. Zuni. I will close the class by Alhamdulillahirabbil alamin. Thank you, everyone. Thank you, Miss.
Thank you, everyone. Thank you, Mbak Evi. I saw Mbak Evi there. Thank you.
Ya, terima
See
kasih Bu
you.
Yuni.
Ya, see you. Sukses selalu. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam
Assalamualaikum warahmatullahi wabarakatuh.
Terima kasih semuanya. Terima kasih Bu Evi.
Oke, sama-sama.